We are back with part 2 of this week's Market Digest, as we've got a lot to unpack. Before we dive in, I want to share something exciting. When I recorded part 1 earlier today, we hit 5,000 subscribers, and now, just a few hours later, we gained 100 more. A huge thank you to each and every one of you for your trust, support, and engagement. Now let's get straight into the markets. In today's part 2, precious metals. Gold is still hesitant, but silver is showing the first cracks. Could this be tied to the potential rally in the US dollar we discussed in part 1? US indices, Nasdaq, Russell, and S&P 500. What's next for the major markets? S&P 500 deep dive, multi-angle technical evaluation comparing it to Nasdaq and Russell, plus a breakdown of key stocks like Amazon, Meta, Google, and Tesla. Global indices overview. A quick scan of the global markets and a special look at Nikkei. What's next after its historic run? Bonus analysis, XLK and the tech sector. The three black cross formation, why this pattern is a major red flag, a 2000.com crash reference, is history repeating itself, technical insights suggesting a significant decline over the next 3 years. What does it mean for tech investors? Let's break down the charts and navigate the critical levels shaping the market's next move. And we start with commodities. Gold. What we are seeing here is the daily closure. What I circled is the bearish engulfing that happened on Thursday, and another red candle was formed on Friday. However, this candle wasn't sufficient enough to either confirm or reject the bearish formation. So the odds are slightly bearish at this moment, and we are waiting for the next move. On the weekly frame, we had a very strong bearish engulfing last week, and this week, obviously, gold tried to negate it. However, the effort wasn't sufficient enough, and this candle didn't cancel the previous one. So the odds remain bearish, albeit barely. And the 15-day candle that closed on Friday, technically it could be viewed as a hanging man, but again, it still requires a confirmation. It has some technical support, but at this point it is difficult to make a call. We still need to wait for another 15 days until we see a strong either confirmation or rejection. Now let's have a look at the Elliott wave chart. So first of all, this beautiful call that we made on February 24, spotting the ending diagonal and its formation targeting to the origin. So the gold even surpassed this, and this is technically a negative flag. And now it is forming some sort of wave, which we will discuss next. So this is the wave I'm talking about. Potentially, possibly, gold may form a zigzag, may have formed an impulse down. If we break it as 1, 2, 3, 4, 5, so it's a legitimate count. However, I wouldn't be so sure about it. There are a couple of questions that I would like to clarify. It could also be a corrective ABC of a bigger wave A. So what is interesting about this particular pattern that is right now unfolding? While this wave A or 1, where the first wave of the bottom could be impulsive, now the question is about the next wave. So potentially this is wave B or 2, and now if it is wave 3, we should be seeing a very strong, much stronger move upward rather than this mediocre range-bound development. Potentially it could even be an ending diagonal. If it is so, we might see a truncated zigzag or of some sort, or a different corrective formation, which could be wave either B or 2. But at this point, there are no clear reference, not enough data, so we are still in a waiting mode. And gold is known to be a very long and very slow moving instrument, so we need to have some patience. And speaking about slightly bigger picture, we've been tracking this since the middle of November. So the only concern, there are a couple of concerns here actually. The big one is the first wave here from the mid-November. This wave is clearly corrective, and in order to make it to the all-time high, gold needs to form an ending, a non-overlapping ending diagonal, or overlapping. So overlapping would be the red path, and the non-overlapping would be a green path. So another thing that this wave 3 in green, or this could be potentially wave 5. So this wave is also doesn't look like a very impulsive structure. Most likely it's a corrective because of too many overlaps here, and there are lots of uncertainties here. So that's the biggest right now issue, and we are looking for further development. So now, and let's have a look at the GOD trust that we usually do at the end of our gold section. What we are seeing here is technically this candle could be a stopping one for the recent rally, and we need a confirmation either upward or downward. This weekly frame remains bearish. However, it looks like we might see another attempt to negate it. Let's see. So the next week will be rather crucial. A closure above the red candle, above the high of the red candle, will be bullish. A closure below this red candle will be bearish. So anything in between will be neutral, even if price goes up higher or lower, but returns to this range. So this is a crucial point. And for the monthly, so far it is not clear. So this the monthly candle, previous monthly candle was kind of neutral, bullish, but now it has a chance to form an inside candle, and it would be a bearish formation if it happens, whether it's green or red. That's about gold. Now let's move on to silver. Silver is also, from the candle perspective, is not very assertive, I would say. So there are two possible candles, but they could be either a top of a tower bottom, a tower top, or they could be just a consolidating candles before moving higher. That remains uncertain. And for 8-day frame, which closed yesterday, so far it is bullish, but not entirely. Still needs a better move. Speaking about the weekly made a strong bearish candle here, but it could also be viewed as a strike 3, which is technically a bullish formation. So, but this candle today that closed on Friday, it wasn't able to overcome the bearish odds of this candle entirely, and now it could be a bearish sandwich or something like this. So again, similarly to gold, we are uncertain here. Now let's have a look at the frames with Elliott waves. So this has been our big chart, and since the last update, we're still unclear whether it's going to be a blue path or a red path. The red path, it's definitely much better, but at this point, we are not seeing confirmation for either of them. So both of them remain on the table, and we will be looking at the minor frame. That's the minor frame, and I think that this has a very decisive message right now. So first of all, last time we discussed this, I circled this wave and said that this wave is not impulsive. And now we have a confirmation of it. So we have one overlap here, another overlap here. So this is not an impulsive wave. At best, it could be a diagonal wave, which could be a motive wave. So this is the potential diagonal that I'm talking about. So speaking about the possible formations here, now with this move on Friday, this wave has invalidated a bigger impulse, and this one I'm talking about. So it made this overlap, and technically it invalidated the green structure 1, 2, 3, 4, 5. So the only way right now it can continue higher as forming an ending diagonal. So this would be it would be this type of formation 1, 2, 3, 4, 5. But this would be a very uncertain structure at the moment. Most likely it will be either the red count as a 1, 2 of a bigger wave down, or an ABC of a bigger wave B. So the chances for blue, I would say, slightly better at this moment, but the red is also on the table. So the green becomes the least probable one at this moment. So that's about the silver. And if we look at an SLV trust, it's a very interesting weekly closures. So these three candles are not entirely bullish, so they have some bearish flavor, and it will depend on the next candle how it resolves. It can be either bullish or bearish. So the weekly closure is the most interesting. So here it closed at 29.59, but just 3 basis points below the high of the red candle. So if it closed just at 63, it would overcame this candle and negated it technically. But right now the odds are bearish, and this is a very big concern. So the next candle to watch would be on 5-day candle on Monday. If it closes above this red candle, so we might see still a chance for the bulls to develop the rally. However, if it closes below the high of this candle, it would be a confirmation of a bearish reversal. Well, that's about commodities. As you can see, silver is slightly better positioned. It has more technical points, especially in the Elliott wave department, while gold is still thinking. Now let's move on to our main part of this part 2, which is S&P 500. What we are seeing here is very controversial closure on Friday. First of all, it's a piercing line on the daily frame, and this is viewed as a bullish formation. However, it requires a confirmation, and to the bullish side of it, it has a very good support at 200 days moving average. However, if we look at the weekly closure, the weekly was strongly bearish, and no doubt about it, and its technical support was huge. And if we look at the even bigger frame, which is 15-day, which also closed on Friday, it has a huge tower top. And this is viewed as a strong bearish formation. Sometimes it even doesn't need a confirmation. And if we look at this particular indicator, so this is MACD, 15-day MACD bearish cross. It happened on Friday, just barely, less than 1 point difference, but still it counts, and it's huge. We'll talk about it just a bit later. On the monthly frame, there are 2 levels. Technically, the first level is the January low. If March closes below January low, it will be a reversal. Not as super strong, but still a reversal, confirmation of a top on the monthly frame. However, if this candle closes below the low of November, it would be a super strong bearish confirmation of a top potentially a tower top formation similar to what we can see right now on the 15-day frame. So these two levels are to watch for the next 22 days and 20 hours for S&P 500. Now let's have a look at other indices, how they closed on Friday. So what we can see here is this is a SPY, triple QDIA, IWM, representing S&P 500, Nasdaq, Dow Jones, and Russell. So we can see bullish engulfing here for S&P 500, the piercing line for Nasdaq, bullish engulfing for Dow Jones, and bullish engulfing for IWM. Definitely, these are the signals, and we might see a fairly strong move upward on Monday or maybe beyond. But so far, these candles require confirmation, and I would say they would need at least to move about 8 or even 20 days EMA. Now let's have a look at the weekly closure. The weekly closure is rather disappointing, I would say, compared to the daily one. Very big difference. So we already discussed S&P 500, Nasdaq. Nasdaq is brutal. This is three black crows here, and this is a very rare for Nasdaq formation, and I would say that this is maybe even unique one. I would say that the last time it happened, it was never actually. This is the first time ever this type of formation happened off the top of Nasdaq. Let's see how it develops, and so far this is a big concern. Dow Jones is bearish continuation candle, the same for Russell. Well, if we consider this, maybe we can see a bounce at the beginning of the week, maybe for a day or two, and after that we will see a strong decline. That's the perspective. Now let's talk about our 10-day frame, which we've been tracing for quite a while, since January, and at some point we were uncertain which type of top is being formed, whether the blue one or the red one. It looks like the red one is getting better perspective right now, better odds, and we would expect it to continue lower unless we still have 5 days to reverse this particular pattern. And this would be a very similar pattern to what S&P 500 did in 2022, which followed a big decline of about 27%. Well, now let's move on to the next one. And this is the most concerning chart probably among all the indices. What we are seeing here, that 3 indexes, S&P, Nasdaq, and Russell, they made bearish crosses, MACD bearish crosses on the 15-day frame on Friday. So this is a big concern. Dow Jones is a little bit behind. It's not yet there, but maybe it's typical for the blue chips stocks. And historically, they tend to lose less in big corrections. Well, now let's have a look at the chart. So what we are seeing here, this is our midterm frame, midterm Elliott waves for S&P 500. We identified this area 56, 69, 75 as a point of no return. So if S&P crosses this level, it will technically invalidate the green count 1, 2, 3, 4, 5 because of the overlap between waves 4 and 1, and at best it becomes a diagonal, even a bigger one, or the red count becomes primary. So far it looks like it might be the former. So the red count will become primary if this cross happens. Now, if we look at the smaller frame, so far this wave has been shaping very nicely, as we discussed it on February 26th, and it hit the area of B, our rectangle, and now it is moving towards, it's already in the red rectangle. So far, this could potentially, if it moves a little lower, it would become wave 3. So far, it is still a possibility for an ABC formation, maybe a bigger wave A before a wave B starts. And perhaps the wave B already started. That's something we would know only in a couple of days. Now let's have a look at the sectors. This is the weekly closure of the sectors, and there are quite a few concerns here. What I can see is financial, industrial, XLK, technology, consumer discretionary, and energy and utility all formed very strong bearish candles. Some of them engulfing. XLK made 3 black crowns. XLU utility technically confirmed a reversal here, and energy is on ready to fly or ready to fall. XLP, consumer staples, this candle is not necessarily bullish, it could be a bearish depending on the next move. So far, it's somewhat similar for healthcare. So that's the perspective. I would say that considering if these 6 sectors which are red, they will make a move down next week, well, there is no chance that staples and healthcare will save the market because their weight is all about 11 to 13%. Now let's have a look at the bigger closure of big stocks. So this is the daily frame right now, but I will quickly switch to the weekly. So this is the weekly closure of Microsoft, of Amazon. This is Meta. This is NVIDIA. This is Google. And this is Tesla. So what we are seeing here, that none of these candles is bearish. Even Berkshire Hathaway formed a very strong dark cloud cover. Apple, technically this candle is bearish and it pushed the price below the 8 EMA, which is also a bearish sign, but it is not as strong as the other ones. And the candle for Alphabet, for Google, this little green one, oh, this is monthly, pardon. This is monthly, the weekly. This on the weekly it's somewhat similar. It could be bullish and we can see a bounce here. However, from the bigger perspective, if you look at the bigger frame, like 15-day frame, so the chances for a big continuation, big bearish continuation down are fairly significant. Now this is all about S&P 500 and the sectors and the major contributors. Now let's have a look globally. What we are seeing here is somewhat disturbing, but maybe not. Shanghai Composites, so the candle had a chance to cancel this red candle, but didn't. So the odds are neutral, bending direction. Hang Seng, it desperately tried to cancel this red candle and even closed above this, but I'm afraid it made the same mistake that it made in September 2024. So it went way above Bollinger Bands, and this was punishable. Now we can expect a red candle after this one. So Japan Nikkei, we'll talk about Nikkei in the next chart. Nifty tried to form a bullish engulfing, and maybe it'll succeed. There are some technical supports for it, but we discussed Nifty in a couple of videos recently, and no changes so far for this one. If time permits, we might record another one in the next couple of days. Australia is falling, nothing you can do about it, and it already below the 50 days moving average, so it looks like it's on track for further losses. German market, it looks like the only economy is doing great right now, the Germans, but okay, we'll see whether it's going to be any reaction to the other ones. So finally, Toronto TSX makes a strong bearish move, and it's not a very impressive one. So I would say that the chances for a move lower are significant. FTSE makes a dark cloud cover, and it's unconfirmed bearish. Now let's have a look at Nikkei. That's an interesting one. What we're seeing here is attempt on Friday, an attempt to negate the big bearish candle here. This is a thrusting line, and I'm not sure whether it's going to be confirmed here. So most likely it will be a move down. So the weekly candles are bearish, and the monthly so far is looking bearish. If we look at the chart that we shared earlier in February, so far it is tracking towards the target. We see the very strong impulse down in July-August time frame. Then the index spent half a year trying to recover from this one and formed an ABC formation, with C wave being an ending diagonal. So right now we are seeing a continued move down, and 35,110, it's a target level for completion of the diagonal. But considering the bigger formation, we might also look for this next target somewhere between 31 and 28.5K for Nikkei. Now let's return to the US market, and let's talk about Russell. Russell is often viewed as a harbinger for the US market, and we'll see whether it's true or not. So this is a daily closure with bullish Harami. Potentially this can be a reversal if we see an adequate confirmation on Monday, Tuesday. So far the frame doesn't look encouraging, especially after this bearish cross and another looming cross. It looks like in another couple of days Russell can make a 50 over 200. On the weekly frame, Russell is falling, no question about it. And until we see a reversal on the weekly, it's hard to imagine any rally here. 15-day frame closed with a brutal candle, bearish candle, and this technically confirmed a big top here. And 15-day frame is 3 times bigger than weekly. So that's a huge blow to the bulls. And on the 3 months quarterly closure, which is coming in 22 days, there is a very good chance if Russell pushes just a little lower, it will form a tower top on the quarterly frame, which will be a very significant formation. Now let's have a look at the charts. Maybe we'll start with a long-term one that has been serving us since January 2020. And what we're seeing here, this is a 2 months chart. On the 2 months frame, we had a bearish engulfing of a hammer, and right now we are moving down. Potentially this could be either wave C of 4, or it could be wave A of a bigger wave 2. So far, I would say that Russell would be lucky if it stops here in the green rectangle. If it moves lower, well, then the next 966 or 2020 lows would be the target, at least the support line. And now let's, and by the way, these are the charts that we shared with our early subscribers in 2020, January 2020, this was our call, famous call on Russell, when we said when Russell was 1660, 1670, we said that it's going to return below 1,000. Let it sink in. And this is exactly what happened. So this was charted on January 2nd, 2020. This was our call, and this is where it ended, 966, in just 2 months after. Well, that's a long-term perspective, and this is the midterm perspective. What we're seeing is a potential ending diagonal here for either wave B or Y of B, or wave 5 of a bigger degree. So far, the wave of the top has been impulsive. Possibly wave 1, 2, and 3 are unfolding. So this was our call on November 23rd, when we said, that's it, Russell is done. Well, nobody believed, but anyway, this is what it is. Now, if we look at the smaller frame, this is again our chart that we shared with subscribers on February 12th. It's been unchanged since then, practically for a month. Once we outlined this, it is falling down quite nicely. So I would say that Russell was the easiest to forecast somehow. I don't know why, but that is what it is. So now I would be expecting wave 4, potentially horizontal one, and maybe for a week. We'll see. And after that, wave 5 of 3, and then completion, and a bigger correction for wave 4, which I'm not putting here. Well, that's the perspective for Russell. And now let's talk about Nasdaq. I think it's the most concerning among the indices. So let's start with technical stuff. First of all, I would like to dig deeper into the MACD cross, bearish MACD cross that happened on Friday on the 15-day frame. So there are a couple of things to say about it. First of all, from statistical perspective, this is the biggest cross ever. And it is about 10% bigger than the previous one, which happened in December 2021, which led to the loss of about 37% for the index. So the second biggest one was in March 20, in April 2000, April 2000, and after that Nasdaq lost 84% in 3 years. So technically what we are seeing from statistical perspective, that if we took an average of biggest one, we might see a loss of about 44%, and it means that Nasdaq will drop toward 13K. I'm just giving a pause so that everyone realizes this number. And the chances, there are two possibilities right now. Either this is going to be a very long and painful correction, like it happened in year 2000 till 2002, till September 2002, and it will take 2, maybe 4 years, because this cross is of a highest magnitude, right? Or if there is a possibility also for a very sharp decline, like it happened in 2020, in March 2020. In this case, we might see a very strong and powerful decline, maybe in a couple of months. Everything will be done. But in both cases, it will be significant. And we are expecting, I'd like to reiterate, about 40% decline on average. So now let's move on to the candles. So what candles are telling us? First of all is, we already discussed this, Nasdaq and the other formed a bullish Harami cross here, and with the potential of moving upward. However, I'd like to emphasize that on Monday, specifically on Monday, the next candle must close above this red line, which is a Thursday high. If it doesn't, then the two candles become a bearish continuation ones. That's a dilemma here. So this is the level to watch for Monday. On the weekly side, on the weekly frame, we are seeing a very concerning development. This is 3 black crows, and they technically never happened before. And if you think that these were 3 black crows, I'm talking about this one in July 2024, they were not, because of numerous overlaps here. And but this is the one, this is the first time ever it happens, and this type of technical support is also significant. So I don't even know what to think about it and what kind of impact it might have. Oh, I can say that this was 3 black crows here on the daily frame, and you can see what kind of impact it had after the formation. So maybe we'll be looking for something similar on the weekly frame. Anyway, this huge decline remains on the table. If we look at the 10-day frame, which closed early last week, that was a huge bearish engulfing, and the 15-day frame also didn't disappoint the bears. It was a big tower top. So the candles are aligned for a big bearish move. However, we might see an attempt or a few in the next couple of days. I'm talking about Monday, Tuesday, trying to reverse this trend, trying to negate these huge odds. Now let's have a look at the chart. If you remember, we just discussed S&P 500, a similar chart, and we were looking for this wave, for this level. So it didn't cross for S&P 500, but Nasdaq did it already on Friday, and it was a very unfortunate event. So now we are looking for either the blue path, which is primary right now, or the green one as an ending diagonal for this target. I would say that green right now is a very low probability. The blue is of a higher priority. And I just marked here 13,000 that we estimated based on MACD, and 13,000 is exactly 0.786% of decline of this wave that started in October 2022, which is not an unusual decline for wave 2 for Nasdaq and the technology sectors. Now let's have a look at this call that we made when we made this call on February 19th. That was a perfect one. We spotted an ending diagonal here, and the formation outlined the target, and the Nasdaq perfectly hit the target. Now the question is, where is it going next? So this is the micro chart. We are seeing a potential bigger impulse, 1, 2, 3, 4, 5, a blue formation, or an ABC, and the bigger correction. This would be wave A of a bigger correction, and potentially somewhere here would be wave B. But we are yet to see how this wave is developing right now. So it's very young, and we need much more data in order to make any significant call. That's for Nasdaq. And the final one, the feature of the day today, is XLK, or technology sector. What we are seeing here is quite disturbing either. So first of all, I would like to emphasize that this is bullish engulfing on the daily frame, but at the same time we can see a 50 over 100 days moving average bearish cross, and the price is well below the 200 days moving average. So far we might see an attempt to challenge it and try to recover. Well, we need to see a closure at least above about the Thursday high on Monday. If it doesn't happen, well, then most likely we are going lower. If we look at the weekly frame, similar to Nasdaq, this is a big formation. This is 3 black crowns, and we have a freshly made 8 by 20 MA bearish cross. If we look for 3 black crowns, it happened only once for the technology sector, and I took this insert here. So it happened at the beginning of this wave in September 2000, when we see 3 black crowns here, technically at the top, and also breaking through the 50 days moving or 50 weeks moving average. You see the 50-day weeks here and the 50 weeks here. So very similar setup, very similar formation, also 8 by 20 MA bearish cross. So technically it could be something big. In 2003, technology lost 82.5% of the top. Can it be repeated now? Well, let's see. And if we look at the monthly frame with just freshly made MACD bearish cross, what we are seeing here is the potential for a repeat, at least a repeat of the 2022 experience when technology lost 35%. If we see a repeated wave here, an ABC formation and a 35% loss, maybe by the middle of next year, 2026, this could be a stop and finally a recovery. However, at this point, would like to emphasize we cannot reject the possibility of a very sharp drop towards similar to what happened in 2020. And if you watched our video for part 1 where we discussed oil, you would know why I'm talking about this particular concern. And then finally, this is Elliott wave perspective for the technology sector. Those who were with us on February 16 had a chance to make a big call at 240 when we said that XLK is completing its ending diagonal 240 February 16. And since then, XLK already lost 9%, but we are seeing potential of losing at least 21% once it hits the origin of the ending diagonal. So far, the short-term wave looks impulsive, and we are monitoring its development on a daily basis. If you watched our market daily, you would know about it. And the final chart is this one. So this is a bigger picture. Potentially, this wave that started in October 2022 is complete as an impulse, and the final one as an ending diagonal. So in this case, we are looking for a return towards 178 and 140, an average like 32% loss. And if we look for something bigger, well, that's, by the way, today is March 8th. And this is technically it for XLK. That wraps up part 2 of this week market digest, and the key takeaways couldn't be more critical. Let me reiterate. Silver is cracking. Gold is still undecided. US indices are at a crossroads, with the SP 500 facing strong resistance. Nasdaq, Russell, and global indices like the Nikkei require careful watching. XLK's bearish formation is sending strong warnings to the tech sector. Stay informed. We'll continue tracking these developments in our daily market waves report. Make sure you don't miss it by subscribing. Fresh weekly analysis available right now at investingangles.com. Check our latest in-depth breakdowns on Apple, Microsoft, Meta, and NVIDIA, just published. Reader membership. Get access to select articles with key market insights. Stock and crypto subscription, only $10 a month for deep market coverage, including major stocks, which I mentioned, Bitcoin, and private Discord access. Follow us for real-time updates on YouTube, Twitter, Telegram, and Reddit at Investing Angles. If you found this video helpful, like it, share it, and subscribe. Let's keep growing this amazing community. Thanks for watching, and as usual, happy trading.